Hey there, traders. What's going on? Jamie Saettele here with SB, and it is 11:11:15. What's up, Raj? What's up, Mark? What's up, everybody? So I'm going to start as usual. I've got some kind of topics that I want to look at, right? Bigger picture stuff and some short-term stuff, of course. Try to mix it up or mix it together for a presentation, but we'll look at just some dollar stuff in general, US dollar charts, some index charts. Not too much on stock market stuff right here. We'll look at a little in depth into euro, into pound. Um, Aussie and Kiwi, we'll look at from actually some indicators, which is weird, right? Because I don't look at indicators a whole lot, but there is one, I think, observation that's worth noting down here. And then, of course, we'll look at what the hell's going on with crude oil, because the implications there for CAD and NOK, but I'm not sure anyone really cares about NOK. So, all right, here's the US dollar. It's a monthly chart. This is the ICE dollar index, right? Sometimes it is great practice and wonderful, use, helpful information to look at these longer term charts. Okay. The grand scheme of things, right, you get some really big bull markets and some big bear markets and some big sideways markets. And really, in this context, I mean, you really can make the argument that the dollar bull has a ways to go. Okay. Now the question is, of course, was that the pullback? I mean, this was a consolidation that lasted for a while. Okay. I mean, in March to now, and this is the ICE dollar index, and notice that we're not at a new high yet. So that's, just like the euro is not at a new low. Now the US dollar, which is the FXCM one, that one is at a new high. Okay. I don't have much of a history on that one. That's why I'm looking at this one. What I wanted to point out, so we had that in March, that RSI reading, which was like 82 on a monthly chart, right? Crazy, RSI reading. And the only time we had seen something like that was actually the all-time high here in 1985. The Plaza Accord came in. That was when they devalued the dollar. Central banks around the world, right? Yes, Mark says US dollar is equally ICE is not exactly. So, of course, the ICE dollar is going to look more like the euro. It's almost 60% euro. It's like 57% euro. Okay. So again, not putting a ton of weight into that. The good information, I think, or the divergence really does occur when you get a new high or low in ICE and not in euro dollar. That's when you get the divergence. Okay, but even looking at the trend that we had in the 80s, okay, up into 1985, the first half of the 80s, that trend still had much deeper pullbacks, interruptions than what we've had so far. I mean, really, this is the first consolidation we've had, okay, since the breakout in the US dollar. And looking at monthly RSI, right, we talk about, Mike and I both use RSI, and one of the best ways to use it is, of course, with the RSI, what you call RSI range rules, right, and how RSI tends to range at various points. So here you get the really overbought reading at the kind of the first leg up, pullback, but look where the pullback came into. Okay, in strong bull markets, you do have RSI providing basically support at the 60 level, and that happened basically on each pullback. All right. Even the one that we had back in the 90s, while not nearly as strong in momentum as what we had in the 80s or even lately, last year, you had pullbacks that found support at 60. Then you had the deep pullback. This is kind of what I was looking for over the summer, because we had the analog that was following it really well. Didn't really happen. Even then you had, RSI support around 60. In this case, we didn't even dip below 65. So, the pullback is really shallow in price, but in time it was fairly long. And, bottom line, you do have to look at this as a breakout. Okay. You can't really go fighting this breakout after we've had so many false attempts on the upside. So that brings me into the next chart, and this is the US, this is the FXCM one, which really does exhibit a really nice slope going all the way back to 2011. And you see where these circles are, okay? More or less every important top or pullback within the bull market has occurred at one of these levels. So that does give us clean, obvious, clear price levels to look at as far as going the other way on the dollar is concerned, as far as that's concerned. Right now really is kind of the middle of nowhere. We're not really at resistance, and obviously we're not at support. So your resistance, again, it's that slope level or that line that's up here. Okay, so this is a dollar breakout. It doesn't mean that it can't pull back. It doesn't mean it can't fail, but it is the dollar breakout, and you do have to, in my opinion, look at the upside on the dollar, especially against, I guess, the components in this index. So when we look at, pound, euro, yen, and Aussie, those are the ones that we're really talking about here. Okay, so that's that. Again, just the biggest thing to look at on this chart is to understand that you do have the slope stuff a little higher. And then when we go to the seasonal charts, this is the ICE dollar index. Seasonality for the dollar, November, historically the best month, along with May, okay, for the dollar, and that's really across all look-back periods. But over the last 15 years, and also once you get down to it, over the last 5 years, we've gone higher into the end of the year. But over the last 15 years and over the last 20 as well as 30, the seasonal high point for the dollar actually does come after 11/20, November 20th. So that would be not this Friday, but next Friday, right? So 1, 2, 3, 4, 5, like 7 more trading days. So that, seasonals have been tracking in the dollar pretty well. This was the October low, and you can see that was the seasonal low point, just as it was last year, actually. That was the same week that we had last year right here. Okay, so we are still in a seasonal strong period for the dollar for basically the next 7 trading days. Okay. So the focus, in my opinion, leading up to November 20th is going to be on identifying support for dollar pairs. So that brings me then to euro and pound, as well as yen, and we'll look at those shorter term charts right now. All right, so euro dollar daily chart, same thing that you saw over the weekend. Again, calling this the golden line, right? I like the golden line. Awfully well defined is the golden line, and support, support, support back into the final rally for euro up into 2014. Support kind of, if you put a parallel on it, same slope. And then the collapse this year through the line. And then, of course, this year it was resistance back into June, August, September support even on 1028, which, that wasn't ECB, that was the Fed, or no, it wasn't the Fed, was it? Something. But in any case, you did have support there, and then we've broken down through it here just recently. So that line itself is now resistance, right? And as it pertains to the 1997 analog, which we've been tracking for a while, obviously, for me to get on board that, I would have to see price get back above the golden line. Okay, now you could call, say that happens and the euro rallies up through here and we get through resistance. You got the summer lows there, 108.07, 108.47, and if the market pops up through that region, and then you're looking for potentially something bullish to happen, some might call that flip-flopping. I would call it surviving trading and changing when you need to. I mean, when you're going to have, you can't really argue with the market and what it's doing. So while we have this dollar breakout and we have euro trade, by the way, did trade into 107.10 and has bounced from there. That's the level that we were looking at for support. That and 106.60. 106.60 is an even bigger level in my opinion. It's down here at the slope. But as far as the big picture theme, the big move, the big trend, kind of giving it, the definition of the move basically is with this line right here. Okay, so that's resistance now, and 108, 00 to 108.50 more or less would be your spot for resistance. And I'm sure if it gets up there that you're going to have people scrambling like hell to, call the end of the dollar rally or whatever. But that, in our case, we'd be looking for resistance there. Okay, that's how I'm looking at this right now as I sit here today. That's what we're looking at. So 106.60 still a big area, and then 108, 07.47 also a big area. Let's go to the short-term chart, hourly chart. Remember, this is the slope that was right after ECB back in October. Okay, 2 lines here became resistance. Even the low, line down here was support. After NFPs made the new dip low here, just 2 days or yesterday actually, before coming back. And we are actually just kind of trading around where we finished the NFP volume level as well as the week open, which is 107.30. So nothing to do here. Okay, it's this is a different slope, of course, than the one on the daily, but the levels still line up as far as having resistance up in that kind of 108.07 to 108.47 region. All right, if we can get up into there, then we'll see what this trend is made of, and if we if it's going to keep on going towards lower levels, notably 106.60. All right, so that's the levels to look at for the euro. I'd have these marked on your chart. Again, it's just a trend line off this, but the parallels extended obviously have been pretty useful moving forward. All right, so then let's look at the British pound, which I'm sure everyone is wondering what's going on there. And we'll go here at the daily first. So remember, pound dollar, the analogs, this is over the weekend, right? Mark, that's definitely not true, my man. He says that forks are I would not say that at all. In fact, the fork I just showed you on that US dollar has been going on forever, as well as dollar CAD that we're about to look at, as well as pound dollar that we're about to look at. Okay, so here was the analog chart. We looked at the Monday low, and we have rallied, obviously, from that. But the implication from this is that we get basically another Friday high. Okay, so this puts us like right here, and that we get a Friday high looking at 152.40, which obviously is not very far away at this point, and then that we collapse down into the lows. All right, and then if this continues to follow, you'd actually trade sideways for quite a while until trading off into the end of the year. Obviously, a lot of things going for the downside on the pound of the short trade. Remember, this was one of those, we had so much for that on the downside as far as, the sideways consolidation, head and shoulders, triangle breakdown, bearish seasonals, blah, 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 could go on and on. So the, idea was to just short into the 5106.60 zone. With a wider than usual stop, but a small position. So your risk is the same as if you would have say like a normal position with a really tight stop, and then leave room for maybe selling on Friday. If we make that Friday high, and that's what I'm looking at here. So here's the daily. Okay, and this 52.40, you can see where we are now. Red line on this, you see that was ECD, that was the BOE day, and that is what 152.06, I believe, and that's the high volume day there. Okay, so when we talk about high volume days, here's British pound futures, so I got volume on here. Here's the volume bar. There's the biggest volume we had actually since this breakout day, which was August 26th. Okay, and you can see what happened on August 26th. We actually continued lower. But then when we came back to it several weeks later, that level was actually pretty good resistance. Now we did go, break back through it, okay, but not on the first attempt. We did sell off that level for several days. And then the most before the 11.5 day, volume day, we had a big volume day on the upside on 10.14. Okay, now that level, more or less, you could say was resistance moving forward. Not really all that precise, I guess, because you did have plenty of days where you spiked up through it. But it was resistance, and as early as, or as late as, I should say, the first day of this month, actually, it was resistance. So we are, to me, this is a pretty big point, I guess, 152. Although slope-wise, I am giving it really until 52.40, if I can find out. There we go. Just real quick, this is the seasonals for pound. They start turning up, really into 11.20. So it's kind of the opposite of what of the dollar seasonality. So most turn up, in 2 weeks. Although there are some time periods that turn up after next week, or sorry, after this week, so after Friday. But you want to see weakness into Friday if you're going to get a seasonal turn. So 152 volume level. The other level, which is just above, is of course the underside of the trend line that was broken, which is basically 152.40. Over the next couple days. And 152.40, of course, is also the low from 10.29. Okay, and I think it might be the 50% retracement as well of the move down. Is it something like that? 61.8 is actually up there, 53.17. 52.62 is the 50% of that move. If you take the retracement off here, it's 52.67. So it's a little above, but from here up to the 52.40 region, kind of would be thinking resistance for this pound move. And let's again move real quickly to a volume chart for pound. Okay. This was BOE, okay, right here. That was what, I guess, on the 5th. So that was last Thursday. And you can see that was, I guess, the biggest 1 hour volume that we had. Well, I'm only going back like a month here. So it was the biggest 1 hour volume we had in a long time. That level on spot is 52.87. All right. So that's the logic of having the stop above 50, or at 53.20, is that it's above the BOE volume area. Again, the downside for this is pretty substantial. We're talking about, when you look at the weekly chart, you can kind of, really get a sense for the breakdown potential, if you will. And I often don't trade like this. I don't, very rarely. In fact, this might be one of the first times that I really put in kind of like traded a traditional, I guess, breakdown or breakout, if you will. Oh, Raj says against 54.10. Yeah, that's my stops are 53.20. As mentioned in the swing update, I wrote that on Sunday and did a little more investigating and decided it could be tighter. Excuse me. But again, downside potential, even if we're not going to reach the targets of 46.80, I still think that there's probably not great support until 49.60, which is weekly reversal support, and even maybe a little lower. You've got some slope stuff down near 49. So, I'm fine sitting with this. It's a different kind of a trade for me than, usual. It's usually tighter stops and little tighter targets, but and trying to get to break even. But in this instance, decided to go for it just because there was so much on the technical side that suggested we could break down more or less immediately. So reasoning for doing the trade is there, but whether the market wants to do it or not, we'll see. So here's the hourly chart. Here's an original slope. We've kind of stopped here again, the volume level. I wouldn't do anything here, just kind of pointing it out. Again, I think the more important level is 52.40, okay? And that would also be median line from, if you take the high from the 15th, low on the 28th of October, and then the high that we had here on the first day of November, 11.2, that would be the median line, okay, for pound there. All right, so 52.40, really the biggest area to know in my opinion, okay, for pound, as far as going lower, or if we are going to still be heading lower. At this point, there's really no reason not to think that. Again, the analog, which has been pretty spot on at times, does suggest that we could make a Friday high and squeeze a little higher, but if we do, would be looking back towards the lows. So that is that for pound. All right, so let's look at dollar yen. Dollar yen has the strongest seasonal tendencies heading into the end of the year, as far as being weak against the dollar. And we have paused a bit here at the longer term median line. If there's going to be a trade on the other side, it probably, again, and this is the theme that I'm kind of getting at here with the dollar, is that I don't think it's until you get up over the next few weeks, maybe after the 7 trading days where dollar weakness starts historically, up near this trend line. And this is just a line from the highs in 6.8 and 8.12, so the June and August highs. And dollar yen is seasonally bullish into the end of the year, but resistance, in my opinion, could come in up near 24.45. You can see all the horizontal resistance you had up there, okay, in June, in July, and you had pretty good sell-offs from there, especially the one when we came off in June, right? Of course, we were short here, didn't cover, and ended up selling more here and got stopped out, as I've been looking for some big dollar yen reversal for this year, and it just hasn't materialized. But we'll get to that as time permits and as the market wants to do whatever it wants to do. So we've kind of come into support here from dollar yen. This is a channel, and you can see the channel pretty well defined. Got resistance here on Monday. This would be a sliding parallel from the channel, which goes off of, and if you, in TradingView, basically you draw the same thing with a fork, but it's the modified Schiff fork, right? And that just means that it basically just uses the angle of the trend line. Oops, what have I done? Here we go. Okay, so it's the same thing. So this is really the median line of that. We've just come into it. Okay. So we could, trade higher from here in dollar yen towards 24.45 at some point over the next week. Okay. The pullbacks that you're seeing right now in the dollar are at this point just that. They are pullbacks. Sure, you might have better support, lower. You might go sideways for a little bit here. I hate these NFP moves. If you were watching the euro in real time during NFPs, we were trading it, within one tick, we traded down to the low, and then we didn't go any lower. And that low was actually 107.05. It's the same as today's low, in fact, and then we've done pretty much nothing for this week. So at this point, just you have to look at the price action of the last 3 or so days in terms of the dollar breakout. I mean, you just have to. That's just the way that you have to look at this price action right now. I wouldn't start getting bearish up until we start getting 7 days out from here when the seasonals start to turn over. Okay. But yeah, just know the levels, and 106.60 huge, 108.0747 huge. So it gives you a good range to work with, I think, as far as trading the dollar. So that's dollar yen. Let's look at the yen against the euro and look at the chart that was put up last night. So here's another, one that we've got, which seemingly has everything going for it, but we're just sitting here. We've got support, and we've just been sitting here for a while, so the more it sits here, the more nervous it makes me that this is going to end up breaking. But this is support in euro yen. And, then doing some research the last few days, of course, I found, this, and, the logic here, as I explained it last night in the piece, but, when you have two funding currencies, and there's no doubt about it, the euro is a funding currency now. It has been for a little bit, but it really started in January when the intentions were made pretty clear that, they wanted the euro to go to hell. The ECB did. So, by doing that, they're just looking for inflation, asset inflation. That's it. And you can see it in stocks going higher. So, the BOJ's been doing this for a while, weakening their currency to boost, assets. And that's really all it is, okay, from a market standpoint. Simple math, right? You divide something by, a smaller number. As the denominator gets smaller, the number goes up. You don't have to really change the numerator. And that's why when you look at, say, something like, let's look at the Nikkei, okay? So here's the Nikkei, and, okay, here's the Nikkei. Actually, I could do this better on TradingView. We'll look at the Nikkei, and then we'll look at it when it's against the dollar, against like unhedged, right? So if we look at the Nikkei, here's the Nikkei. This is a weekly chart, okay? This is obviously the Nikkei in local currency terms or in yen terms. And when you look at it against, say, the ETF, which is the US, which is, the one that does not have, yen hedged out of it, okay, you end up getting a far less, superior return. I mean, you can see here that the Nikkei recently surpassed the highs that it made back in 2000. Well, you're way underwater if you're buying this in dollar terms. So that's why people get hosed when they're like, oh man, BOJ is going to, are going to rip some stocks on the upside, and they go out and they buy EWJ, which is the ETF. Well, they don't hedge out the currency risk, okay? Because a lot of this gain is not due to the outperformance of the stock market. Really, in Japan, it's due to the fact that it's priced in yen, and the yen's getting slaughtered. So now the BOJ is doing the same exact, or sorry, the ECB is doing the same thing. Okay, so I'm not sure what is it maybe EWR or something? Let's see, what's the Europe ETF? Either way, if you could find it, look it up, and compare it to the DAX. It's the same exact thing here. Okay, so what we're looking at then is maybe the stock markets are a little ahead, right? So as Japan versus DAX, Nikkei versus DAX goes higher, that basically means that Japan hates their currency more than Europe hates their currency, because they're trying to boost their assets more than the ECB is, and you can obviously play that through euro yen. So look, the point or the reason this trade was made was because we were at EWG. Thank you, Brian. Perfect. Okay, so let's look at German 30. Okay, so here's the move in German 30, and we'll compare that with EWG, German ETF. Okay, so here we go. All right, so here's the German ETF in orange. Okay, so here's the EWG, and if you're EWG, you're going back, you're actually really suffering, okay, because we didn't even make a higher high back here in April, compared to 2014. The DAX has gone nuts to the upside. All of this is basically euro weakness. Okay, so you can see what I'm talking about there. This is not hedging out. The orange line, of course, is not hedging out the exposure to the euro. Okay, so that's that. All right, so that's all good and fun, but why did we make this trade? Well, basically, we're at support. Okay, and here it is. We're at support, horizontal support. You could even go back a little bit and look at, this is where we were last year at this time, right here, literally right there. Like 1 year ago today was right here. Okay, so we could, or no, sorry, not 1 year ago today. 1 year ago today we were over here. This is 2 years ago today we were right here. All right. In any case, the seasonal component for yen is super weak, meaning yen crosses are super bullish. Okay. Euro yen probably has the best risk defined here, just quite simply because we are at support. Okay. Slope support. This has been a fork that's been pretty useful, obviously. We continue to come down to this level and hold it. So, we did have a J spike over here. We came back and had another nice long wick bar. Again, to trade this thing, I'm long now, but would like to see it get back above where we opened the month. If that happens, then we can really, really look to press the issue on kind of, loading it up with a little more size or whatever. And Raj says, if this level breaks, is that game over? Well, it would be game over for up in probably until 128.40, right? And 128.40, this is going back even further. Obviously, this is a weekly chart. So it'd be game over for the euro yen until 128.40, but, that's the only game that would be over as far as that's concerned, would be 128.40. You go down there, and then you could see support 124. Again, that's weekly reversal support here. Okay, but that's what we're looking at with euro yen. Okay, so again, just don't want to beat a dead horse here, but talking about the ratio analysis, and this is kind of thing is not, you can't just take two stock markets and compare them and see what's if it gives you any insight into what the next move in the currency is. But you can do that if both countries are basically have funding currencies, and at this point euro and yen are quite clearly the two funding currencies. So that's what we're watching, and look, we'll continue to watch this, right? Kind of in the sweet spot for a turn higher. Only had one turn over the last year that lasted longer. The lag did longer than 2 weeks, and that was the top back in almost a year ago, December 2014. So if this is the this is it, and we've turned up pretty sharply. We could look at the two stock markets separately too here, and you can see why that's turned up. Okay, the DAX is really broken out at this point. This thing just continues to ascend, and for me, I don't think that there's good resistance up until the parallel up here, the upper parallel on this. Okay, so I mean, we came into this was BOJ down here, right? Had that crazy day, looked like a super bearish day, and then the next day, key reversal. We've gone up ever since. And then the German 30 or DAX, kind of just treading water. For this one, the daily might not be all that useful at this point. We're kind of in the middle of nowhere, but the weekly is the really big one. Resistance for the weekly, we're really inching up on it, right? We've got the resistance here from the sliding parallel, supports down here, so much closer to resistance in the DAX than we are resistance in the Nikkei. And if you do get any sort of divergence between those two stock markets, in other words, the DAX pulls back, while you get continued ascent in the Nikkei, euro yen's going to go through the roof. All right. So just wanted to kind of go through that a little bit. I want to make sure that it makes sense too, to you guys. All right. So those are the things I wanted to cover. Aussie and Kiwi, I said I wanted to look at those a little bit too from an indicator standpoint. And let's do that real quickly. All right. So I'm going to take this, get rid of everything, get rid of all the drawings. Okay. All right, so here's Kiwi. Look at RSI. Again, overbought and oversold are not all that important themselves. It's how the market trades after, being overbought or oversold. So, you can go back a very long time and kind of do this yourself, but let's just look at some overbought readings, right? Overbought, this is like the sloppiest, this action back here in 2012 and stuff. This would be like the worst, price action to try to trade on a daily, right? But even then, check this out. You've got, when RSI comes down into 40, after being overbought, in other words, the initial pullback into 40 really, is really should be looked at as a buying opportunity. All right. And that's the case kind of with any asset. It's really how that works. So when we went oversold, starting back here in July of 2014, every bounce really was the sell. And back when we were really bearish Kiwi earlier in the year, one of the main reasons was that the market RSI kept pushing up into 60 and failing. All right. So that changed with this rally. Okay. So this was either a really mean fake out, or it's a trend change. Okay. And, you can see here we are. Friday's decline on NFPs brought RSI kind of down into 40, right? So it's not out of the question that this is actually a bull market in Kiwi, is what I'm saying. You can make the case, of course, that you've got a bottoming pattern here, whatever. We've been looking at the other thing, of course, is the 55-day average, which, I'm not a big moving average guy, but basically since the entire move down, you had a gap there that kind of got this whole thing started back in July of 2014. It was actually like 2 days after my son was born, and I remember that pretty well. But since then, the 55-day average has been really solid as resistance at several points, even as support, as resistance here. We didn't quite reach it back in August, okay? But now we've come back into it and we've stopped, okay? And it's been, we've traded around it for like 4 days now. So, that combined with the indicator thing, I don't know, it's interesting to note that, the technicals here, if you're just looking at this alone, it's not out of the question that you actually have Kiwi working, for its kind of leg over here for a base to go a lot higher. Right now, again, would like the seasonal stuff to line up because it's been so useful lately, right? And seasonals pinpointed the low here on the week of September 4th. That was the low. The high here on the 16th of that week in October. And now the seasonals for Kiwi actually turn up across most look back periods. Again, not this week, but next week. So, that would be, 7 trading days, right? So seems to be a big turn window, I guess, across the entire market starting in 7 trading days. So when we look at Kiwi on a short-term basis, Ali, I got you, man. I'll try to check that out for you. Give me a sec. So we got the, let's see here, short-term stuff. Here we go. Kiwi dollar. Again, scrolling back, we do have this 5-wave rally off the low, right? We have come into 66.15, which was support as well. 64.45 is a little cleaner, okay? It's the volume levels, former highs and stuff over here. But as long as we're holding up, it's okay to be bullish basically against 64.90, okay? Now you're going to face trouble up in the 65 region, especially, okay? Remember 66.65. It's just the high that we had up here. It was right. This was, I think, the milk auction. I think you had RB and Z after that. So that region's looking important, okay, going into basically tomorrow, 66.65 for Kiwi. And I do plan on putting some Kiwi stuff in the swing update tonight anyway. So, if we get up there, that's resistance. If we don't and we get lower, then we do have support to watch for. Again, near 64.45 and maybe even lower, maybe even near 63.50. And if you're wondering why 63.50, that's the weekly. This is the daily. 63.45, wrote about that in the weekend. You have the median line there, okay? I've seen really big turns on that thing going back throughout the entire downtrend, okay? Resistance, oh, resistance here too, resistance here too. But it was support for big lows back in September of 2014, and then of course March of this year. So my focus trading this is on basically being bullish at supports and bearish at resistance, but resistance is again up here, 65, 66, 50s, 60s, okay, and then support, you know, closer to 63.50s. Okay. What else? Aussie is also the one we wanted to look at. Aussie is similar with respect to not the moving average, because it hasn't held any moving average, but the RSI component, right? We were overbought, not nearly as overbought as we were with Kiwi, and we have come down into 40 now. All right. Aussie's just languishing though. Aussie looks kind of like crap. So that's why I'm saying, I said pattern-wise, I really have no idea what Aussie's doing. I mean, got a three-wave rally here, but I've seen so many three-wave rallies that are turned into 1-2s. You know, you've got, you know, copper and base metals and everything like that falling apart, but Aussie's not really, you know, above the or below the lows. We're still above the lows in Aussie. Favorite, you know, thing to look at, of course, is because they're so objective, and so there's really no arguing it. But the month opens and stuff like that, the week opens, month open 71.20. That's going to be resistance in Aussie if we get up to it. You do have employment tonight, I think, in Australia. Aussie employment, yeah. So that's 6:30. I'm in the Midwest right now, and that's 7:30 in New York. So Aussie employment tonight could send you kind of in both directions, and I will watch for here's Australian dollars. This is actually like the report tonight's right there. All right. So this is actually, I'm looking at 71.14, 71.20 region right here would be employment. All right. So if you get a big jump up in employment, or, you know, in Aussie unemployment, you might actually have a rip on your hands in Aussie dollar. And seasonals are still bearish, so, you know, you might actually have a chance to sell Aussie at a pretty good price at 71.20. And I still think that 69.80s are still support for Aussie, you know, ahead of the lows. Okay. And you can see actually what I'm looking at here. I'm not using this channel necessarily, I know it's well defined, but I'm actually using the slope off of these two highs. Okay, original. Okay, so you can see here, but then the sliding parallel extend off the bottom was support here the other day after NFPs, in fact. And if we work higher off this level, you have another parallel from the same slope, which has been pretty decent for resistance up here, 71.20, 71.14, 71.20, which is the month open price for Aussie. Okay, so that's what I would look at for Aussie on employment, which is coming up tonight. All right, so we looked at Aussie, we looked at Kiwi, we looked at let's see, Ali wanted to see seasonals for gold and silver. let's see here. This is silver. Unfortunately, for whatever reason, they don't. This is silver. My data doesn't go back that far for these futures contracts. Let me see if, yeah. All right, well, price is in black, okay? It doesn't look like there's any sort of bullish potential at all for metals. Really, until you get into February. You know, maybe early in the year. Okay. In fact, if you look at what's happened, that's silver. Same thing here. I need more. I don't have a lot of data going back that long. It's something I need to find more data to run these studies though, because that would be useful, especially in the current environment. But let's talk about gold real fast. Silver, haven't really done a whole lot on. Let's look at gold real quickly. So, all right. Geez, silver, gold, crude, destroyed. All right, so we looked at, if we look at the weekly chart. Okay, we're basically back at the same line that we rallied from. Okay, so if we don't hold this, you know, the next level really is close to $1,000. Now, let's look at, I need to put some crosshairs on this thing so that we can see ever since, you know, your bear market started here in metals. Okay, so here's the top. 2013 sold off into, well, that's a monthly chart. 2013, okay, sold off into the end of the year, okay, right here, didn't bounce. 2014 sold off into the end of the year, had a big rally. 2015, basically the same exact thing, okay, actually made the low in November that year. It would be this week, in fact, a year ago, but then had the big rally started basically the first 3 weeks of the year, of this year. And so, you know, we've got, what, 7 weeks left or something in the year. I don't see why there's much of a, why we wouldn't expect the, you know, the market to continue to sell off gold from here. I'm not saying we can't rally, but as far as, you know, having a low in place, I think that the, you know, the cycle here seems pretty clear that, you know, the best time to look to buy gold, you know, appears to be the very beginning of the new year. You know, and there could be a lot of reasons for that, but one of them is actually tax selling. So like when people are, you know, doing their tax work at the end of the year, they sell off all their losers or sell off some of them so that they can, you know, have tax advantages. And that's, I'm pretty certain that everyone's going to have tax advantages in gold stocks and gold holdings and everything else. So that, you know, might get a final sell-off in gold. But to be quite honest, I'm not, until I see something to work with in gold at this point, I'm just not going to waste my time with it. You know, I'll still put up the long-term charts and stuff, but I just don't have anything to work with here. I mean, the market under siege, right? And it might be best to literally just sit back for the next 7 weeks or whatever and wait. And And yeah, so asking about wave labeling, sure. So actually have that done here. Okay, so if we had a triangle that ended back here in 2014, in July 2014, what you've got from here, from July 2014 high, is an ending diagonal. Okay, 1, 2, 3, 4, 5. And lo and behold, I didn't even notice this until just now, but you see this confluence between this long-term slope line? That's right at the end of the year. So there you go. That makes sense for a, you know, for a rally. If it's going to happen, it's going to happen from down there. Okay. Now, near term, if we zoom into this chart a little bit, see this is a new structure to watch. Okay. The median line here, you get resistance on this. So it'd be a pretty good rally from here. But, you know, if you got that rally, that's where resistance is. That's the NFP at Friday's high, so 1110, you know, would be your spot for gold. So there's no trade here. It's too late to sell it and too early to buy it. But, you know, if you get a rally into, again, 1110 or so, that looks like it would be resistance, you know, if this is still a really strong downtrend. Okay. But, you know, as far as taking a long position or getting bullish gold for anything meaningful, I don't think that it's really wise to do so until you get down towards the end of the year. And looks like that's at these levels too, the 1020s. So looking at, Ali asking, is it a long-term bottom? Yeah, I mean, I really have no, you know, no idea. You got to remember too that you can have markets. So for example, this was the 1980 high in gold. Gold really, yeah, we had periods where it rallied, okay, but gold really didn't rally, like it didn't really rally, like go into a huge bull market for like 25 years. So, you know, everyone wants to catch the last bull market, okay? That's kind of how it seems to work. And, you know, there's this bull market, yeah, we've been in a 4-year bear market, and we're going to have a hell of a rally at some point. Okay, we really haven't had a good rally yet. Right? We haven't had one of these that last a couple of years. We're going to have a rally, and eventually we're going to make it up to this parallel up here. Okay, so you know, I could see us, you know, dropping into 1,000, 1,020, and rallying up into, you know, 1375 or whatever, you know, even over the next year. I don't think that that's that crazy of an idea. But is gold going to like $5,000, like people like out there, you know, all the fear mongers want to say? You know, that's not one. That's just useless to try. You're wasting your time thinking about it like that, in my opinion. Okay, so you know, it would be an interesting study to run an analog on this. Okay, because we could very well be in a period where gold trades in, you know, it's a big, huge range, you know, between roughly like $1,400-1,500 and $1,000 for years and years and years. I don't think that's that crazy of an idea for gold. Okay, but now we're getting pretty long-term stuff on here, so that maybe that should be like a special report that's done at some point. Pound CAD, someone just asked about that, so I might as well take a peek there. I also did want to make a mention real quick on dollar CAD. Seem to have lost a connection here or something. What's going on? Okay, here we go. Dollar CAD. So NFPs, people forget that Canada actually had really sweet jobs too, like a really good jobs number. And this is resistance, okay? Really nothing to write home about though as far as the decline. It goes to the whole thing about, talking about, the dollar being, breakout and price action within that context is still higher, but we're at 32.65 right now. As far as a trade that lasts a day or two or three, you could get down to this is a pitchfork that's been pretty good, right? And you've got 31.90, and you've got 31.50 as supports, okay, for dollar CAD. So it's fine, in my opinion, to have look to be short dollar CAD at these levels, but man, make sure that you've got stops at 33.20. Okay, because here's the deal with dollar CAD. If dollar CAD, let's say crude breaks this support, and we're down 6 days in a row in crude, which really doesn't happen a whole lot. I'm not sure that the next resistance for dollar CAD is until like 138 or something. Okay. So this is like a really long-term median line. But if this is also slope. Let's see here. Let me go back to this chart. So this is, you can see this trend line right here, goes off the lows, 2007, 2011. Okay, that's where you're looking up here. All right. I'm looking for a bigger, kind of a bigger fourth wave, if you will. Fourth waves are usually pretty annoying. So you'd be looking for, maybe that's 5, maybe you get a flat, but near term, you can look down towards 31.90, anywhere, 31.50 to 31.90 in dollar CAD. Okay, but this really is a channel, okay, that goes way back to the lows in 2007. And your next spot up here looks to be about 137 or so. The reason I said 138, like half joking on that, but I'll tell you in a second why that is. So, you know what the all-time high is in dollar CAD? It's 1.618. Okay, so there's that little fib number, right? It's 1.618. You also had a really big low of 1.41, and now maybe 138.20 will be resistance. Half kidding. No, in all seriousness, dollar CAD has a pretty good looking short-term slope. This is, I put it on the chart on this post the last few days, and this is it. Okay, this is the hourly chart. So this is the line right here that had your red cells on it. It was actually support last night in Asia, and since then we've just kind of been a disaster all over the place. Today's a weird day. It's not. I mean, in the markets, it's Veterans Day. Yes, it definitely looks like it's consolidating for another push higher. Okay, as Ali just said. But again, for me, support as far as buying it, you want to buy it at like 31.90 or even 30. You just want to buy it on these slopes, on these supports. Okay, so this one is one to watch. Okay, down here, and then of course this one down here. So that would be the next spot to look for, because don't forget, this is still resistance and we are holding it. All right. But again, support 31.50, 31.90. Okay, so real sloppy range. We've seen how dollar CAD does this. You go into these times when it moves real freely and easily, and then there's times when it just is super sloppy. Okay. Yes, down move is certainly corrective, but you can see times when the market moves down corrective and it just keeps moving down in a corrective manner. That's why the levels are so important. Okay, you want to buy supports and resistance. If you buy here, you're buying a resistance, and it's kind of tough. And don't have, it's not like a huge argument here for breaking out from a well-defined pattern or anything like that. It's not like a big breakout. We're in an uptrend here, going back to October. But uptrends, you do want to buy supports. So watch those supports again, 31.90s, 31.50s or so. That's where I would be looking for supports. Okay, so that's that. Pound CAD, and then I'll wrap it up. So here's pound CAD. This is resistance. I'm out at break even at 202 on this. Several reasons for that. Talked about it last night in the post, but we had the sell off. It's just kind of been that kind of the last many months for me. And the decline, the idea was NFP takes us into 98.75, target was 98.90, and then I was looking to sell another rally. Well, of course, it was just missed the target, and here we are right back at 202. So this is resistance, could turn down here. Again, dollar CAD's at resistance, but looking corrective. Pound dollar resistance is still a little higher, 52.40. It's just not something I'm super comfortable with at this point on pound CAD. I'm probably going to forget about it for a little bit. But yeah, this is resistance. So, as far as a sell here, if you're going to do it, this is probably the spot to do it. And then IDO search, great question, Ali. So IDO search, I'm going to be doing a webinar with that on Wednesday, the 18th. So next Wednesday, I'll do this webinar. All right, I'll do the midweek webinar, and then I'll do an IDO search webinar after that. Okay, and it's not just going to be me. It's going to be me and one of the founders of IDO search. And we will go through stuff, take questions, and it'll just be for you guys, and then we'll archive it, but anyone can watch it. So that should be of great help, I think, in helping understand the product and what you can get out of it and everything. Okay, so next Wednesday we'll be taking on IDO search. All right, that's what we'll do there. So that is pretty much it. Kind of a current situation, not all that right now, not all that super as far as opportunities are concerned right at this exact moment. I feel like Friday things get pretty good, because that's when you get the analog high in the pound, and that might be when you want to step it up. Euro yen, love the trade idea. It just has to get going, and if we start getting going, that's one that I'd be looking to like pyramid and all that stuff. Ali asking about dollar Swiss. Actually, let me take a look real fast, because this is a big one. Testing, testing. Anyone there? I just lost connection. All right. Dollar Swiss. I lost the connection there for a sec. Sorry about that. This is still a breakout, obviously. With dollar Swiss, we have median line support really just under here. This is what you want to follow as far as I'm concerned right now for dollar Swiss. Okay, the lows right down here in May, highs up here in August, lows down here in August. That's the structure. So your focus is a lot higher. And the median line we've broken above that. This is now support. Okay, so it's really just below where we are right now. It's not that far away. Okay, if that breaks, then your next support is actually 99. That would be an area that would be, more in line with putting on a position just because you've got the combination of horizontal and slope. But your question about is this another fake out or not? I mean, I don't think it is. I actually think this is the real deal for dollar Swiss. I'm sure that a lot of people are scared out of their pants to trade this thing because of what happened in January, but here's a log chart. So this is a long-term chart going back. We've broken not just through, we're still below the January high, but we just broke a trend line that goes back to 2008. Okay, so we just had a pretty big breakout. Now, one reason why 99 would be such a great spot to get long if you get a bigger pullback is that that's also the top side of this trend line, right? Yeah, so, this is it right here, right? 99, and this, is another reason why I think you have to look at the dollar. This breakout is real for the dollar, and you want to make a case for a really big trade. Well, let's go way back. Here's a 30-year trend line. We could get up to this level, and I don't know what the rally is going to look like, okay, because it's not a straight line. But you've had big moves in dollar Swiss, obviously, in the past. Dollar Swiss hasn't necessarily participated yet in this huge dollar rally that we've had. We're still down near levels that we were in 2009. The next resistance for dollar Swiss is up at 111. Okay, it's 1,000 pips from now. After that, you're talking, 120 plus. So, near-term trading-wise, what we care about, for me, 99. Okay, 99 is the top side of the long-term trend line log scale. It would be right here. Okay, and it's also short-term for entry, slope, and the former high at 99. This high up here from August of this year. So, yeah, it's a nice run, consolidating, support on the median line, bigger support at 99, and the setup is there. Okay, the breakout is there. The breakout is real, in my opinion, but I'll just leave it at that. So, yeah, watch that 99 figure. And again, that's why I think it's also one reason I've got on the charts here. We've got the the levels, right? So you can see here 99.02 is one, 99.74 to 1 is the median line early in the week. It moves up a little bit now, obviously, but yeah, 99 probably the biggest spot. All right. Okay, so now I'm really wrapping it up. Been a good webinar, guys. Thank you very much. Great questions. Dave Freeze, quick question. If equities break down, pushing euro up, do you expect Swiss correlation with euro to break down? Not necessarily. If we get a rip higher in the euro and the DAX comes off, then dollar Swiss probably comes off too. Okay. All right. And again, if we get that, then we would probably actually see 99 in dollar Swiss. Oh yeah, Ali, the charts that are posted real time, that's in the squawk. So you've got to see that. You can see that shows up here, okay? Um, and you would need to, yeah, you need to sign up for squawk, okay? It's just the way it works. It's, shows up easily. It shows up on the side of the website, I believe, for the members page. But um, make sure you get the squawk for Twitter, okay? All right, guys. Thank you so much. Um, Ali here. If you got a question, specific question about that, just send us an email. We'll see what we can do, man. Okay. All right. Thank you very much, Ali. Thank you so much. Thanks everyone for attending, and I'll get this up for you and archived. Okay. All right. Have a great rest of your day. All right. Bye.